Oh, hey, you made it! Welcome back. Gosh, okay, so there's so much more to talk about in the world of lending, and I'm not even a lender. So let's take a minute to talk about the different kinds of loans you can get. Different kinds of loans, huh? Yes, there are different kinds of loans for different situations. Everybody's different and their situations are different. Some people have bad credit, some people live in rural areas, and some people have served our country in the armed forces. And coincidentally, there are different loan types that are more beneficial to different borrowers. Okay, we're gonna kick things off with conventional. Now, I really didn't want to start with conventional loans because I wanted to save this for the end, but in reality, everything else is like a specialized version of a conventional loan, because conventional loans are normal loans. I guess my point is that if you don't fall into a conventional loan, then one of the other loan types will probably be better suited for you. But really, most folks do fall into the conventional world. Rates are great, and down payments can vary all the way down to 3%. Should I make a big deal about that? Down payments being as little as 3% for buying a house? Also, a great bonus is that mortgage insurance can be bought down or can fall off completely. Like magic. All right, FHA. Now, if you don't already have great credit, FHA may be the ticket for you. The real benefit here is that conventional loans, they judge you on your credit. So the worse credit, the worse rate, and the worse mortgage insurance. But FHA already comes with great low rates and lower mortgage insurance for those of us with questionable credit. And hey, whatever. We all know life's freaking hard sometimes. No one's judging. The only problem here with the FHA is that if your loan comes with mortgage insurance, it'll always have mortgage insurance. It doesn't fall off. Oh, and the down payments can be low as 3.5%. VA. This is specifically for veterans. First and foremost, if you are a veteran, thank you for your service. Truly, thank you. Highlights of this loan are that the interest rates are super great. Arguably the best rates around, period. And you can get it with no money down. Yes, I said no money down, as in no down payment. And no MI. Sit with that. It's just the best loan, and as appropriate, it goes to the best and most courageous people that our country has to offer. All right, USDA. Okay, now this is a great loan type if you're in a more rural area. No money down, interest rates are pretty good too. Now, don't ask me exactly what a rural area is. I mean, I know, let's not be crazy here. I know what a rural area is, but I don't know how they exactly quantify that. All I know is that Bend, Sisters, and Sun River are excluded, so you gotta go somewhere else. Oh, and another kind of a downer is that the DTI is just a little bit lower, and the loan amounts are just a little bit lower as well. So in some other parts of the country, this loan product probably works really well, but here in Central Oregon, it's just a little bit challenging, but not impossible. Okay, now real quick, what are closing costs? Well, sadly, it's the cost of buying a house. No, that's not true. It's the cost of getting a loan. Yes, besides the interest you pay on the loan, there are other fees associated with giving you hundreds of thousands of dollars. But some of the costs aren't really extra. They're just you paying in advance some of the things that you're gonna have to pay anyway. So when you start making those mortgage payments, part of that payment is gonna go to an account for taxes and insurance. Those accounts require you to be ahead of those fees by a full year. So when you start the escrow process, you fill that account with a year's full of taxes and insurance. So really, a bunch of those closing costs are you prepaying for yourself, right? We following here? But there's some other costs associated, such as appraisal fees, processing fees, other fees, these fees, that fees, that do apply to the loan, that are things that you have to pay. But you can negotiate some of those things. I mean, you can't really negotiate taxes. For more information on how to negotiate some of those fees, check out our other video on mortgage secrets that'll save you thousands. In fact, you could go there right now and then come back to this if you wanted to. Just a thought. I'll put a link in the description below. All in all, you can expect to pay about 2% of the total purchase price for the house in closing costs. Oh boy, I said it, didn't I? My lender friends are gonna kill me when they hear that. Okay, look, there's no hard and fast rule or percentage for calculating closing costs. So maybe just forget what I just said about the 2% rule. But on a $500,000 house, you can reasonably be expected to pay about $10,000 in closing costs. And that's in addition to your down payment. However, depending on the market, sometimes we can negotiate that we can roll it into the loan, or we can negotiate that with the selling side to get them to cover some of those costs for you. So there are ways around having to shell out that extra closing costs. So there you have it. Now this was way longer than I wanted, but the things we do for you, right? Hey, feel free to check out the next video in this particular lending series by clicking right there, or any of our other videos on how real estate works right there. And yes, I'm asking, go ahead and subscribe by clicking right over there. Cheers, and we'll see you next time.